At any rate, we have Troy Noonan with us today. Now, moving averages are probably the most commonly used technical indicators that traders use to identify setups with high probability outcomes. Troy Noonan is the CEO and the lead strategy developer at NetPicks, and he's going to showcase some of his most successful strategies using moving averages. He's going to demonstrate some new setups and novel indicators that he uses to create high percentage trades. And I want to turn things over to Troy right now and welcome him to Tradestation.
All right, great. Thank you so much for that, Don. I appreciate it, and I appreciate all of you being here today. I'm always excited to present for the Tradestation group because I've just found in general Tradestation members tend to just be more astute and just I really enjoy interacting with them. I've got many of our members using Tradestation. And I am the CEO and the lead strategy developer for NetPicks Trading, as Don said. And what I'm going to show you is a set of trades that I've been developing, and it comes right out of my newest strategy called the Spotlight Power Trader. But this is a separate approach also. It doesn't have to be part of Spotlight. It just happened to have kind of been born from the Spotlight Power Trader experience, and I'll explain that a little bit as I go. Before I start, though, I'd really love to see how many of you have heard a presentation from me before. I'd kind of like to know who I'm speaking to and if anybody is familiar with me or not, as well as maybe you can type in where you are located, because I'm always curious to see where people live, because we're a real small community, and I could see that most people do know me, which is pretty interesting. And then also what you like to trade: futures, forex, equities, all of the above, baseball trading cards, you name it. I'm just curious kind of what everyone's into. So interesting. Is there anybody out there that doesn't know me? Because I'm kind of blushing here behind the mic. You can't see it. All right, so very good. You can keep typing those in. That's very interesting to me. I'm going to move on here and get into this. As you probably know, I'm not a big fan of slides. I use them rarely or very minimally. So let's get through just a little bit of upfront business. First of all, who am I and why should you care? Well, sounds to me like most of you know who I am, but I started as someone just like you, kind of looking for a better way to trade. And 14 years ago or so, I happened upon a company called NetPicks, and they were doing some novel stuff, mostly creating trades that just kind of, you know, from start to finish, the whole trade was planned, and that's what was lacking for me was an actual plan. And before too long, I was invited in as a trade coach. One of the owners had heard me interacting with their members on their forum and liked what they heard, and kind of followed along my my interactions for a while, and then they invited me in, and I decided to join them if I could start a trade room using one of their strategies. And that kind of changed my life and launched my career, because they said yes, and I began with one of their older strategies, and everything else just kind of came from there. And you know, being in front of the charts and having people hanging on my every word, I mean, that was pretty scary, especially the first day. And when the curtains opened up and I had to start calling trades, something hit me right away, and it probably saved my entire trading career going forward. And that was this idea that if I don't just follow the system and then something goes wrong, I'm going to look like an idiot. I'm going to have egg on my face, and there's a lot of people that may get hurt by it. And at that point, this realization hit me really hard that if I'm going to be successful at this, I better just lean on the system. Let the system tell me what to do. If there's a loss, if trades lose, at least I did my job. It won't be my fault. It'll be the system's fault. And that may seem silly now, thinking back on it, this whole fault thing, whose fault it is, whose fault it isn't. Losing is losing. But what that did was it took a lot of pressure off of me, and it also taught me this big lesson that there's a random distribution of wins and losses, and nothing is going to win 100%. That just doesn't exist in trading. And a lot of people have a hard time with that, and years later, they still struggle with it. They can't accept it, and unfortunately, they just can't seem to win either, because losing trades get you to the winners. If you have a winning trade strategy, that winning strategy will have a random distribution of wins and losses. So it's how you deal with that is going to determine your success. And so when I create a strategy, when I create a training regimen, I have a philosophy that I build in. And again, this is something that you'll see as I show you some of these new setups. But that philosophy, there's two lines of thought or training that you need to learn to be successful. And this is all my opinion, but this is also based on 14 years of successfully calling a live trade room and dealing with many, many traders over the years. I can't even count how many. And of course, tens of thousands, I don't even know, maybe I'm exaggerating, definitely more than 10,000 hours trading in the markets and live action, calling trades, everything that's involved with that. So, I mean, I think that my opinion probably counts to some extent. So these two lines of thought, or lines of training. One, you have to learn the techniques of whatever strategy you're going to use, okay? And hopefully you are using a strategy, not just the shoot from the hip strategy. That one doesn't seem to work for most people. All right, so you have to learn the techniques of a strategy, but learning techniques is pretty easy, right? It's just a matter of repetition. You learn some rules, you practice it over and over until you're really good at it. Most people can do that without trouble. The other line of training, which is harder, is how do you transform yourself from just some person trying to trade into a successful trader? And there are specific steps for doing that. And so when I create a strategy, I put a lot of attention and effort into the actual training side of things and how to be successful, regardless of what strategy you're using. So you get really good at the strategy, but then you deploy it in a way that you can succeed, grow your equity, and achieve your objective for trading, which hopefully is to make money and create a better lifestyle for yourself. That's my trading philosophy, and that's what I try to impart upon everybody. Okay? And consistent trading is a mix of the right belief, the right practices, knowing your techniques, and then also surrendering to the fact that some trades will lose. And that's okay, because losers get you to winners. And as long as you're growing your equity, 2 steps forward, 1 step back, 2 steps forward, 1 step back, you're going to be very successful, because as you grow your account, you can increase your position size, use power of compounding, and ultimately get your financial goals. Okay, and I know I'm talking really fast because I just want to get through this quickly so I can get to the trade setups, but this is all super important foundational stuff. All right, so I'm going to explain to you some of the concepts behind this new, what I call fun with moving averages approach to using one of the oldest technical indicators there is in a brand new way. And of course, I'll show you the techniques, and we'll talk more about this discipline that helps you transform yourself into becoming a legit, profitable trader. All right, and at the end, I got some free gifts for you. And since you guys probably know me or have known me, maybe you have these gifts, and if so, I apologize, but you can get them anyway, and they're free, so we'll make those available to you. Okay, so let's move on. Okay, so fun with moving averages, it's about focusing on simple, reliable setups. I mean, that is kind of the whole theme of the Spotlight Power Trader in general, to shine a spotlight on high percentage trades. The word power is referencing the 12 powers to successful trading. That's a white page report that I'm including in your bundle of gifts, but most of you, or many of you, probably even have it, but I don't know that you're paying enough attention to it. If you cover all 12 of those powers with your trading, you're going to be in the strongest position you could possibly be in for success, and far better off than the person on the other side of your trade. And then, of course, a little bit of the background we'll talk about, and then we'll get into the basic setup. So there's 3 setups I'm going to teach you today. One, the basic setup, is actually the first setup that gave birth to the Spotlight Power Trader. So we'll get into that, and then some brand new ones. One I'm calling Open on the Lines. We'll get into that, and then finally the 521 cross, and you guys can probably guess what that is, but there's a few twists on that one as well. So I'm really excited to show you this. So let's just jump in to the charts. So let me give you a quick background. This is just a regular chart, right? It's the Russell E-mini, but it could be anything. It's also the most current price action piece of history on this market that there is, because this is today's chart and this is the actual bar that we're sitting on right now once the market's closed today, right? So, and I've got two moving averages on here. One of them is a 20 simple moving average, an SMA, and the other one is a 50 EMA, exponential moving average. Okay, those are two moving averages that I like to use. The concepts I'm going to show you can work on many different moving averages. Okay, they just happen to work really well on these. And the 20 SMA in particular is a really nice moving average to use for kind of giving you a heads up on where a pullback level might be in a trending market. And you can really see that here in this, little trend up that you see here. You have a nice leg up. We call that, or I like to refer to that as an action move. You have a move back into the 20 SMA. That's a reaction. It's typically 1 to 2/3 of the action move. So this is like perfectly, what's that, like about a third, right? Maybe a little more. Maybe it's even a Fibonacci retracement. That's pretty close. But the idea is that the subsequent action move will often mirror the first action move and is predictable and tradable. And it uses this idea that the immediate past predicts with a high degree of accuracy the immediate future. Knowing nothing's perfect, it gives us a lot that we can trade off of. So we got this action move up to here. We've got this reaction move into the 20 SMA.
Hey, Troy.
And if
Troy, this is
yes.
I hate to interrupt. When you switched from the slides that you were running to your chart, some of the folks lost they lost the scene. They weren't seeing your chart. So I've urged them all in the chat panel to reload. But perhaps you could maybe start from where you began with your own screen. Just back up a little bit.
Okay. Okay.
All right. Thanks.
Sorry about that, guys. Technology, But so basically, what I'm saying is that this is any old chart. Where it's the Russell E-mini, but change the symbol, make it whatever you want. It's a price chart, buyers, sellers on the chart. And I've got two moving averages on here, a 20 SMA, which is the blue one. That's a simple moving average, 20, right? And the yellow is an exponential moving average. It's a 50 exponential moving average. Now, you can use lots of different moving averages with what I'm going to show you. It just so happens that these work really well with the setups that we're going to look at. Now, I like the 20 simple moving average a lot because it provides a possible area where a trending market is going to pull back to and give us maybe a chance to get in on that trend. Okay? And I like to think in terms of where the energy is, an action. An action is a stronger move. So you can see in this trend up that you got this strong move coming up. I'll call that an action move. Then you're going to get a reaction that is, if it's perfect like this is like your perfect stair-stepping action here, it's usually 1 to 2/3 of the action move. Maybe it's a Fibonacci retracement even, because that's roughly in that ballpark too. But notice that the 20 simple moving average is like capturing the pullback, right? It kind of shows us where the reaction is likely to end. So there's this idea that action, reaction, and then subsequent action, and the subsequent action tends to mirror or mimic the first action. Of course, it's not perfect, but sometimes, like in this case, it can be, and you'll notice that this action move is almost a carbon copy, and maybe not quite, but this second action move is tradable, and it uses this idea that the immediate past predicts the immediate future. You could even look at it coming down. You have an action move coming down, finds support on the 50 moving average, stabs up into the 20 SMA, that marks anywhere from 1 to 2/3 of the action move, and then sets up a subsequent action move down. You see how that works? It also works on all time frames. This is nothing new. I talk about this all the time, and this is not really the thing I want to show you. I'm just trying to kind of lay some framework as we get into these new setups. Okay, so now that you've learned that, I've tried to create some strategies that take advantage of those situations. And I've also pulled in some unique and novel elements. So if you've ever seen the counterpunch trader, which evolved and gave kind of turned into the spotlight power trader, which is totally different but uses some of the same stuff as the counterpunch. The main thing that makes those two strategies work is identifying when buyers and sellers become exhausted. So you know that if a buyer becomes exhausted, then the sellers can take over, or vice versa. And there are different degrees of exhaustion, because you can see right here, the buyers get tired and the sellers take over, but the buyers are just catching their breath. And then the sellers get tired and the buyers come back with their subsequent actions. So you kind of need to, bring in more information than just knowing where the exhaustion points are. But knowing where the exhaustion points are is very valuable information, and it's the very basis of the Spotlight Power Trader and the setups I'm going to show you. So I identify those with these three dots, okay? These three dots tell us that the buyers are in charge or the sellers are in charge. Even if it's just for a brief few bars or a lot of bars, we'll use other pieces of information to help us distinguish that. And one of the most important other pieces of information is what we call the balance line. And the balance line is very important as well, or the signal line. Got different names, but it does the same thing. It's an incredibly powerful momentum indicator. So just looking at that first action move, if that's at the right edge of the chart, when the green bar closes above the balance line, we got price action confirmation that the buyers are above the balance line. The balance line marks the power between buyers and sellers. So when you have an up bar closing above after exhaustion, there's a good chance that the price is going to move higher, and that can give us a setup. Okay, with Spotlight Power Trader, with Counterpunch Trader, that's kind of the basis of how the setups work. Now, with moving averages, we're pulling in the moving averages to show us these levels of support and resistance that we can trade off of. Okay, so for example, when the price pulls down into the 20 SMA and we get exhaustion and we get a close above the balance line, now we've got a lot more information that really starts stacking the odds on our side for a trade. Okay, so the way the first setup works that I'm going to show you is that you determine 1, 2, or 3 moving averages. Okay, so what I've created has the ability to work with 2 EMAs and 1 SMA. So I've only got 1 SMA and 1 EMA on this chart. We could add a third one if we want. Okay, the exhaustion dots need to fall, one of the 3 dots, within a certain proximity of one of these EMAs. Okay, in this case we use 4 ticks as a default, but if we're using like a daily chart or a bigger swing chart, we probably give it a little more room. Okay, so ultimately this is going to be a setup off of our 20 SMA, because one of these dots is very close to that pullback into the line, and it gives us a trade that takes advantage of a subsequent action move. I mean, really, you're going to be seeing it like this at the right edge of the chart, right? You don't know what's going to happen next. All we know is that we got some odds on our side, right? So let me go ahead now and turn on the setup. Well, first of all, before I turn it on, what I started using was this fib line retracement tool right here. And what I learned was by drawing from the lowest point of the bar that's on one of these 3 dots to the high of what we would call the setup bar, which is that green bar closing up above the balance line. It has to be on the 3rd dot or up to a certain amount of bars to the right, which we can control. If we draw that, that gives us what I call the X factor that we can use for measuring accurate targets. So this was an amazing discovery that I made. quite some time ago, and I've built it into my strategies. And you'll see it as we go. So without even anything else, just my exhaustion dots in the balance line, I have enough to trade that puts me in a better position than most people out there. And you can see what happens because we already know what happens. But look how accurate target 2 is and where the price stabbed up before heading the other way. And what happens when you use this formula is that you are using trades that are dynamically tuned to market conditions. Some trades are bigger, some trades are larger. You put your stop right below, either where the exhaustion dots are, maybe a tick below if you got a little support level there. And you have a nice risk-reward ratio built in also. So it's a really nice method. But, you know, in live markets, when you're trading and you're trying to make decisions, to have to draw your targets, think through everything in live time, you know, maybe that's too hard. So, of course, in our particular style, we created a what we call the calculator. This is the fun with moving averages calculator. I don't really have a better name for it. And we go ahead and, oops, we'll turn that on, and I'll show you what the trade looks like. Let's turn the other one off. And there you go. So, and look at, you can see here, the little plus sign is your entry. What was a green bar is now a dark gray bar because we're using spotlight technology, which alters the colors, and that kind of helps us psychologically. Green means you're in a long trade. Gray means you're flat. Red would mean you're in a short trade. So it's flat, but you have an up bar. It's dark gray, meaning up, but we still want the price to prove it by going a little further. And then it hits the entry, triggers into the trade, and the bars turn green. And now we know we don't have to do anything except let the trade play out. We don't have to worry about selling or getting out. The bars are green. And notice it comes up and hits our objective. The objective is always target 2 with a single position. Multiple positions, you can use the trailing. You could go to multiple targets, kind of like what we do with our other strategies, something that, you know, teach all the time. But the beauty of this is that these are very good trades. Now, when is this going to fail? You guys should know already, obviously, when a trend is starting to peter out and slow down, because eventually the trend will turn and go the other way, and at that point the trade has lower odds. But you see, you got 1, 2, 3 setups, and it's actually the 4th one, and it misses its break-even level by just 1 tick. It almost breaks even anyway. All right, so the other thing is I've got additional trades turned on here. One thing we've built into this beautiful calculator is the ability to show us what we call add-on trades, but they're just other setups that work independent of the main setup. So let me turn them off, and now you'll see the main setup here. So you got one trade here. It hits a money management level, which causes a stop to move up to a break-even level, and then it trails the balance line, right? Because that's marking the power between buyers and sellers. It becomes a great line to trail. Hits all its targets, stops out, another pullback into the blue line, another setup, and a perfect trade. That's a beautiful thing, don't you think? Now, you did see that yellow trade a moment ago. Here's the last trade of the day, by the way, and look at how accurate that target was. I mean, you know, I can't make this up. It's just the way this works. And the beauty of this is that it's price action based. It's not some fad approach that will stop working one day. This works on so many different charts and markets, and it will always work. Now, obviously, some trades win, some trades lose, so you'll remember my philosophy of trade plan and you know, not trading randomly. When we take a high percentage trade like this, and then we come up with a set of rules, same start time, same stop time, quitting goals that we call our power of quitting. It empowers us to stop trading. We can identify a real high percentage trade, hit our goals, and then we could just finish. That trade plan's done. You could always do another trade plan. You could be starting later in the day, another time, another market, another chart. You can cookie cutter that approach. But the idea is that with that set of rules, you can go back and prove to yourself by achieving what I call measurable results, and that's with a series of techniques. I call it the 3-step sniff test, fast testing, and then back testing with our pre-programmed spreadsheet. You guys have probably heard me, maybe some of you even have it, the UTA. But you build a list of trades so that you could experience the average distribution of wins and losses, and then ultimately look at your win-loss column, and despite some pretty ugly losing trades sometimes that will always happen no matter what, there are a ton of winners, and you will grow your equity. 2 steps forward, 1 step back. With this, probably 3 or 4 steps forward, 1 step back. It's random, but you're typically going to be winning a lot more than you're losing. And the one big philosophical thing that I would have you really focus on is don't focus on a trade winning or losing. Focus on being able to quit your session a vast majority of the time with a positive result, with minimal and efficient trading. That way, you're probably going to be able to win over 80% of your sessions. You're going to break even on a few of them, and maybe you'll lose 15% of your sessions. But who wouldn't want that? If the losses are controlled with minimal and efficient trading, that's a money-making business that you can reach your financial goals with. Everyone tries to overthink things. Everyone tries to fix a broken trade. What can I do to tweak it so that that trade didn't lose? Well, whatever you do, the next trade will lose because of what you did, where it would have been a winner. You're maybe trying to fix something that isn't broken in the first place. These are all big picture philosophical things that I always want you to pay attention to. Now, let's just review this setup so that you can still see kind of how this works. The yellow trade has the exhaustion dots that it would have been a blue trade also because they're close to the 20 SMA and the 50 EMA. Whenever you got EMAs that start spreading away from each other, that's usually a good sign. So at the right edge of the chart, this looks kind of messy. You even have a break-even trade and even a losing trade. But when it starts to capitulate, and you can kind of see it with the lower highs, lower lows, and then the crossing over and the spreading apart, now you got exhaustion dots on both lines. That gives you a setup. Now the calculator can't choose both colors, so it goes with a hierarchy, and it chose the trade off the 50 moving average, but the setup would have been identical because remember, it's the way we draw and find that X factor, in this case the highest point of those 3 bars to the low of the setup bar, right? I just showed you this a moment ago, but if we use that same tool, you could see the calculator does it for us. See that? And look at pretty accurate target before it starts to come up. Now this one overshot things, and that's why we have a trailer. Didn't go much lower, and then it pulls back to what? The 20 SMA. You see this all the time, and that gave a second trade. Worked pretty nicely too. I mean, look how close it came to target 3. These are pretty darn accurate. Okay, so anyway, this trade, the yellow trade off the 50 moving average, is something that I learned by observing the counterpunch trader for several years using it in a trade room, and I thought, wow, it seems like every time there's a counterpunch trader setup with those exhaustion dots laying on or near that 50 moving average, it gives me a really high percentage trade. And so because of that, I started exploring, and that actually became the first trade of the Spotlight Power Trader. Now it's also the first trade in what I'm calling fun with moving averages, and this is the foundational setup. And again, you could also put it on a 200 moving average or whatever. All right, so that is one setup that I think you could have a lot of fun with. Now, what if you don't have the exhaustion dots? Well, I mean, you could still kind of look for similar types of setups. You can look for the pullback that might be 1/3 of the action move into the 20 SMA. You can create a similar type of thing using the onboard Tradestation tool, the Fibonacci price retracement tool. I did not, let me just draw this really quick again. I just drew any old one and show you. I did not use the fib lines. I turned them all off, undid them all, and instead I use these numbers, -100, -150, -200, -250, because that stands for 1x, 1.5x, 2x, 2.5x, x being the measurement that I was talking to you about. And because they're negative numbers, it projects forward instead of the positive numbers, which is really a retracement tool. You see, so I'm using this in a way it wasn't intended to be used. Kind of reinvented it and remade it in a way that makes sense for me. But you guys can do the same type of thing if you want, or you can use a tool set like this. All right, so now that you understand how this one works, I want to introduce to you something that's totally different. Well, actually, one more thing we'll do before that is let's look at another chart or two with these ideas. So I pulled up just, everyone's favorite stock swing trading chart, Apple Computer, one of the greatest trading charts that ever existed. I mean, people make their personal wealth just by trading this one chart. And I just wanted to show you how it works in the exact same way. I've got some add-on trades in here too, but the sell-off occurred, and you could see how it predicted with really good accuracy. Like, look at the target there, how it came down and stabbed right to it. It also lined up with target 2 here. Apologize for all those messages. But you can just follow each trade down and notice the accuracy of those targets. And now you got a long trade. So, I mean, what do you think the chances are that it's going to hit target 1 at least? Probably pretty good, wouldn't you say? So if you were looking at a chart like this, let's make this bigger. You're looking at a chart like this, for example, and you wanted to trade this, but you don't want to spend, $166 a share on 100 shares or whatever, you can just buy a simple in-the-money put. And as the stock hits the entry, you buy the put. And when the stock comes up, when it finally gets to that money management level, you can move your stop to break even. Basically, you let the underlying stock price movement guide your options trades. And so one of the things I did, and I don't have it on this chart, but I pointed out how these put options on the way down were making double and triple percentage gains all the way down. I mean, it was like pennies on the dollar, and you're able to make 100, 200, 300% returns on very controlled risk. And even if the trade loses, trades do lose sometimes. See if I can find one. Still looking. No. Well, trust me, they lose sometimes. Here's one. So this one's a put. You lose. You get long instead. You're not losing the entire value of the put option. You're going to be selling the put option back and recapturing some of your premium. So you're only losing some of it because of the type of options we're going to be interested in buying. So it's a real great way to trade with low risk, take advantage of great trading charts like this, and pocket huge gains. Low risk, huge gains, and lots of winners. Right? Who doesn't like that? So Matt says, how are the dots determined, plotted, or is that proprietary? Yeah, it is proprietary, Matt, although I teach the method to members who join up. So yeah, I have to hold something back. However, you can simulate these ideas with plenty of different, there's a lot of creative ways to use these concepts. This is just my way of doing it. And it is built into, like I said, the Spotlight Power Trader, and now what I'm calling the Spotlight Master Suite, which is an enhanced version of Spotlight Power Trader that includes these new trades. But these new trades are also, I'm going to create something that just uses these trades and nothing else. I'll probably call it Fun with Moving Averages. Why not? I like to keep things lighthearted. It reminds us kind of why we're trading in the first place, right? So now that I've shown you that pretty cool setup, let's talk about one that's completely unique and novel, and one that I happened upon by accident. Find which one. It's this chart here. It's a crude oil chart. And you'll see I got 3 moving averages on here, and there's some different colors. This is a very unique setup. It is not the same setup that I showed you, although it works the same once the setup occurs. In other words, we're going to use the same trade measurement, the X factor, because it's very accurate. I really apologize for that annoying message that keeps popping up. I don't know how to move it to another monitor. I'll just keep clicking off on it. Now, this setup here, let's take a look at the pink trade. Let me declutter this by turning some of these other lines off for a second. This is a 200 moving average. What this setup says, and it's not, there's two sets of exhaustion dots. The one that we're focusing on is this first upper set. Okay, so this first upper set is what this trade is focused on. Is it? Let's look for a second. Yes. Okay. There's this unique thing that occurs with these exhaustion dots, and I've never been able to explain why, but I've been able to see it occur over and over and over again. And at some point, it's like, who cares why? Like, I could turn the light switch on and the room lights up. And I don't care if I know the physics on why the light bulb actually works, right? I mean, for most of humanity, no one knew the answer to that, and then, you know, not too long ago, someone figured it out, and now we all enjoy light. But how many of you turn on the light bulb and go, oh, well, this happened scientifically to make light? No, none of us think of that, right? So now I realize with some of these setups, I don't need to care why, as long as it just keeps working. So what this setup says is on one of these three dots, each dot has a bar associated to it, right? There's this bar on the first dot, that bar is on the second dot, and that bar is on the third dot, okay? And that's always going to be the case. When one of these three bars, and it doesn't matter which one, opens on the line and then closes in the direction of the trade, it gives us some really great setups. And the setup occurs at the first bar that closes below the balance line up to a certain amount of bars over from that third dot, in this case 4 bars over. So this is like 1, 2, 3, and on the fourth bar, that's your setup. And so if we were to draw the actual targeting, we draw it from the high of that third bar to the low of the setup bar. And, well, I think what I failed to see is that this setup is actually using this setup dots. It would have been the same setup bar, but the calculator knows to go to the newest one. Now you might say, well, wait a minute, none of these bars are opening up on the line. And that's true because in the calculator we have the ability to set how close it opens to the line. And I set it to 1 tick for this example, which means this, if you look at the 200 moving average, it's 53.89. And if you look at the open of this bar, and the light gray bar does close down in the direction of the trade, you'll see that it opened at 88. So the line's at 89, it opened 1 tick below. So that's close enough to opening up on the line. Okay, I have a 1 tick parameter. So the trade that I needed to draw is from these setup bars, like this. See? And now you can kind of see the accuracy of it. And it went a little further, but that's why we have a trailer. But anyway, that's the setup. The setup is that if one of the 3 bars opens up on the line, then and it closes in the direction of the trade, it gives us a pretty high quality setup. So let me turn the other 2 moving averages back on again, and we'll look backwards and just find a few setups and analyze them a little bit. So we got the 20 SMA, the 200 EMA, and the 50 EMA. Okay, so here's one on the upside, right? You got these 3 bars right here, and you've got this bar here closing 1 tick above the blue line. And this is a red trade, and the reason why it's not blue is just because I use the other one I showed you is blue. I could make this maybe a lighter blue, I don't know. So this one comes up and it hits that little dot, which is 90% of the way to the first target, and that's far enough for us to take the risk off the trade. So the stop would move up, it comes out and stops out. Okay, so it's a break-even trade, which then goes south and heads into a winning trade. Here's another one. So in this case here, you've got the middle one opening up 1 tick off the blue line. It gives you the setup, and it's, you know, this setup is pretty good. It usually always gets to target 1. It didn't quite get to target 2 in this case, but you could see some others on the way down. Here's, you got the opening on the 3rd dot. It gives us a nice setup down. Here you got an opening on the actual 50 moving average, which, you know, I try to keep the colors of the trade close to the color of the line, except for that red example. It's an exception. But notice, look at target 4 and look how close it got to it. Pretty cool, huh? Keep going back. Another nice, you know, target 1 is like, it's a good scalping idea. Now, you might go, yeah, there's a lot of trades. If you don't want so many trades, you can open up the calculator and literally get a more higher quality trade, but you'll get fewer of them. And that's if you are to say it has to close right on the line instead of one tick off the line, and that shuts off a lot of setups. But the ones that are remaining tend to be really good. So you have fewer trades but higher quality trades, and that's not a bad thing. But I mean, have we found a losing trade yet? Let's see if we can find one. I know there is one somewhere in here. A lot of these are just get 90% of the way to break even. That's okay. Target 1, like I said, a really accurate scalping target for this kind of setup. Finally, a losing trade. So this is, there's another losing trade. So 2 in a row, but then that was on the heels of a nice big winner. That's usually how losses come, right? They cluster up. It's that random distribution of wins and losses. So the point being is that this setup, you're going to win a lot more than you're going to lose, and you're going to be able to quit with a positive result a vast majority of the time with minimal and efficient trading. That's the theme. That's the philosophy. And that's what makes these setups really come to life. Let's see. Mark F says, when price hits break-even dot, you move to break even. Have you tried to break even plus 1 to get? And actually, Mark, Matt, that is what we typically do, is break even plus 1. Sometimes we'll work around a key level adjustment. So if the break even on a long trade pushes you up to 51, maybe you keep your stop at 49, because the 50, any of those quarter century numbers are usually roadblocks, psychological barriers, and you might be able to stay in the trade by maintaining a couple ticks of risk, right? This is part of the 5% art to trading that I also teach with all this. But in the meantime, I agree with you. We do try to lock in a tick and cover our costs for sure. And maybe more, because remember, when the line starts moving, the stop starts trailing and locking in more. So when an EMA is short for exponential moving average, an SMA is short for simple moving average, WMA would be weighted moving average, et cetera, et cetera. Okay, so EMA is just one of the many acronyms that we use, like BE. It's not to be or not to be. It's actually break even. So you learn stuff like this. Good question. Hopefully that clears it up. All right, so before I move on, because I don't have a ton of time left, the yellow one is a 50 EMA, exponential moving average. The magenta is a 200, and the blue one is a 20 simple moving average. Those are the ones I like, but there are other moving averages that work really great, and it leads me to my next and final example. I won't have time to get into filters and how we use some of these moving averages to filter out lower percentage trades, but that is something built into the system. I'm just not going to have time to show you that. Although if Dawn would give out my email, you could always follow up with me, and I'd be happy to answer questions. And then Dawn, also, I wasn't able to type anything into the chat, so the link to our free giveaways, I'm not sure how to give that to everybody. Maybe you can help me out there, tell me what to do in a moment. I'm almost finished. Let me show you the last and final setup. This one is the one that a lot of our members are they keep sending me emails on how much success they're having with it. It's really a cool setup. Everyone knows about a fast moving average crossing over the slower moving average, and it can give some really great trades, but it also can run into trouble, right? Because you could get a lot of whipsaw, especially in sideways markets. So what this does is it combines the crossing over of two EMAs with our exhaustion dots, balance line, price action confirmation, and our measurements to get those great accurate setups. Now you've got something that works really, really well. And then there's some other twists that I could show you that some of the traders in our group have discovered that they're using and having a lot of success. Now this is using, I call this the 521 cross, it's using a 5 EMA and a 21 EMA. And when the 5, first of all, they both have to be angled in the direction of the trade. Let's just isolate one of these trades and kind of look at it for a second. So in this case, they're both angling up. Okay, you could even look at the data window and get the reading on it to see for sure. But they're both angling up. You can see that from here to here it went up. 21 is the teal color. The faster one is white. But the thing you have to know is you've got your exhaustion dots. You've got your up bar. The dark red is up. It was in a short trade, right? That's a losing trade, by the way. But it loses, but the original stop was up here, and you end up getting out right in there, and it's only, you know, like you save 2/3 of your potential loss. So it's really pretty good at flipping over and admitting when it's wrong and getting on the right side of things. So that's what we call a stop and reverse. But a red is down, but when it's a darker red, it's an up bar. And notice that you get a new setup, and then it triggers in, and all of a sudden it's green. Okay, but the point is that the 5 crosses up over the 21. They're both angling up, and then you get this great trade. It doesn't quite get far enough, right? It stops out with money management, but then you get more setups in here that you can take advantage of. Because it doesn't have to cross over, it just has to be above and moving up. So it's already above the 21, it's moving up, this is moving up. You've got your exhaustion dots again, you got a brand new setup. It's not a bad sequence, right? And look at the accuracy. I mean, look at this next trade here in target 2. You're going to see that over and over and over again, and it's because of the measurements of the X factor that I showed you. So it works. It's what Spotlight Power Trader and Counterpunch Trader were built upon. Now, the innovation of this, now just doing this alone, you're going to end up being able to quit your sessions with a positive result a vast majority of the time. But I've got some traders that are more picky. They want to see a more dramatic angle, incline of the moving averages. So when that first one's set up, maybe that's not the trade they're interested in because it's still kind of flat. They're going to wait. Now it's spreading apart and starting to angle even higher and take this one instead. So that's something that some traders are doing with a lot of discipline, but they practice it first. Like, look at how these are both angling way down, and that's just such an obvious trade. And then when you get bars that have wicks stabbing up into our lines and then the small body closing down, or like even when it stabs up into the line here and then closes down, I forget what that's called, a hangman or whatever, in conjunction with these setups, I mean, that's just cha-ching-a-ling-ding. Those are money trades. So you could look for those. Okay, you got everything pointed in the right direction. You got your exhaustion. You got your price action below your balance line, right? The confirmation of it pushing through to the entry, strong angling down, and you got these bearish bars stabbing up into the lines. I mean, there's so much information for you, and it's all price action. It's all price action. Moving averages are a lagging indicator, but we're not using them like that. We're using them just to confirm things. All right, so another trick which I'll show you, and then I think we'll have to finish because I'm nearly out of time. I learned this from a trader that I collaborate with sometimes, and I've been helping him, and he's got this great idea. He will only take trades when the 200 moving average is biased in the direction of these setups. So like all these short trades he's not interested in. In fact, he might have even taken that long trade and lost. But the way he does it is really cool. Let's see if we can get it all in one vision here. There's just so much price action. The 200 is so far away. All right, so basically, the way he's doing this is he'll take a horizontal line and he'll draw it. Like sometimes the markets are kind of flat before they start to break out. So notice that right here, the 200 moving average is below, or it's how does he do it? He draws a line at the place of the setup, and he wants to see the 200 moving average moving up. So he's not going to take the short trade. He's going to take the long trade, for example. Anyway, it's a very simple test. All you do is make sure that the line, the 200 moving average, is in the direction of your trade, and then you filter out the setups that aren't. Robert P. These are both EMAs. Okay, it's a 5 EMA and a 21 EMA. Now, some guys rather use a 13 and a faster line. There's automation that's being developed for this as well, where you could actually automate and optimize and run tests using these setups to get different parameters and different types of interactions between different moving averages. And that's going to be really cool when it comes to Forex and stock charts and longer term charts and time-based charts. These are all momentum bars. Momentum bars work great with this, but other charts do too. And with the automation, we'll be able to come up with all kinds of interesting things. Learning the right proximity of the dots from that first setup I showed you on a $150 chart will be a lot different than a chart that's trading at $15 a share, right? So with the optimization tools of the Tradestation automation, that's priceless stuff, and that's all built into the Spotlight Master Suite and the Spotlight Power Trader, and it probably will be built into this as well, the fun with moving averages with the Spotlight technology, right, of the colors and stuff. So that's all I got for you now, because I've only got a couple minutes left and then we're out of time, but I hope that you have enjoyed this. If you've got a few more questions that you'd like to ask, then please let me know. Yeah, as far as the screen delays, AD, that might be just your internet, because I'm looking at my computer behind me and it's pretty good actually, but it shouldn't be delayed. I don't think it will be anyway. So you're very welcome, Matt. I hope you guys love this. Can this be used for swing trading? Yeah. Well, I did show you that one chart in Apple. Dawn, I don't know if I have another couple seconds here. I do want to show. Here's an IWM. This is a fantastic market for trading options. But look at these swing trades. I mean, they're really, really good, right? And then I got one of the spider. All I did was copy the Apple chart and paste it and change the symbol. Didn't change anything else. These are the setups of the first ones I showed you with the dots, exhaustion dots near the lines. I gave them a little more room than just 4 cents because it's a $280 stock. But look at the beautiful trades, and you could see the accurate projections and stuff, right? Now it's getting into a long trade here. I mean, the odds are that trade's going to win, right? The odds are greater that trade will win than it won't win. As you can see, it was even, we had to look really hard just to even find losing trades. These are just random charts from today. Finally, Dawn, I would like to give a link to, you gave the free reports. Thank you very much. Everyone can click on that link that Dawn put into the chat box. There's some good stuff in there. I highly recommend downloading it. It's all high-value stuff, including my no-brainer guide to trading success, which is really the whole second line of training that I talked about earlier in this presentation. I think you're going to want that in the 12 powers, and then my partner Mike's 6 options secrets to successful option trading, which you could use these techniques to trade options. All right, so that's all I got. This is recorded. Where can the recording be found? Dawn, you might want to let people know, and then also if you wouldn't mind putting in my email for people, troy@netpixtrading.com. If anyone has any questions, I love to interact with traders. Feel free to reach out to me. Thank you very much, Dawn. As always, a pleasure. Thank you for having me. And thank you guys for taking an hour out of your day to let me talk trading with you. It's fun with moving averages. Hopefully you had as much fun as I had. Hope to see you all again real soon. Bye-bye, everybody.